Good morning, guys. What's going on? Happy Tuesday, July 9th. We're live. We are funded, baby. And we're now trading a funded account. How about that? How do you feel about that? Feels pretty good, I guess. Now, any money that I make, I actually make, which is cool. Or at least some. One of the accounts, I'm still in the challenge phase, but the one that I trade more often, we are funded, baby. So we're live. We're looking at some charts. I like NVIDIA, but there really is no setup for me to trade yet. I was looking, nothing yet. It may have gone too far without me, so I may not be able to trade it today, which is fine. No big deal. I'm going to pull up a couple other charts and see what else is going on. Tesla is pushing up a little bit. Okay, nothing crazy. I traded that yesterday. It worked nice. Meta, next gainer. Google's the next gainer. Amazon. I like Amazon's daily time frame, but it's just been choppy on the shorter time frames. I like Apple. I think Apple is a good trade idea above this 228.50 area. We'll see. I mean, I'm not going to trade that just because it goes above the level, but if it gets up there, I like the look of it, but not the strongest on the day, so not really the best idea personally. I did get an alert today on SoFi, which I'm going to pull up now because I didn't check it out until right now. You have a breakdown. We were watching for a potential breakdown trade here. The thing about this was I was saying yesterday was like, okay, SoFi is a candidate for maybe momentum to the downside, and it's not doing well. The problem, again, that you have, and I'm not going to swing a short right now. I'm not going to do it. Just have not had a good history doing that with the market this strong. So if I know that my chances of making money are like 30% or whatever the number is, why would I do it? Why would I do it? I'd rather trade at 50%, or 60%. Of course, there's no such thing necessarily as a guarantee or whatever, but I don't know, probability game, man. That's where my mind is at. But it's weak and it's getting hammered again. For those of you who are interested in SoFi and saying, hey, maybe even myself, I don't trade individual stocks, but I'm talking about like, it's down a lot. I don't know. Would you rather? I saw a post for 2 seconds that I scrolled on Twitter today. 2 seconds. I rarely do. And someone was like, yo, I'm dumping out of Palantir and I'm going all in SoFi. Now, I mean, Palantir, look at where that's at, nearing its, not all-time highs, but it's getting back up there. It's doing very, very well. And if you look at that compared to SoFi, you're looking at SoFi and saying to yourself, hey, it's not down at all-time lows, but it's not near at all-time highs at all. So you get a better deal, bang for your buck from a chart perspective. I'm not saying that's a better deal. I'm just saying from a chart perspective, risk reward looks a bit better on something like that. What's going on, Flippa? So we'll see. You got SMCI, which I do think looks pretty good. It's feisty. We had this line drawn in here from a while ago. I kind of have it in there. I can get rid of it because it's kind of not respecting it very, very well. But either way, higher lows, and it's trying to break these lower highs. And you tried to break it here, but it was kind of a false break. And now let's see if we can get a pop going forward here. But stock moves a shit ton. So if you like that, then that's for you. Okay. So there's that. MU, Micron. What is SMH doing? SMH is up yet again, nearing an all-time high on SMH. The Russell down 0.5%, playing the same chop game we've been getting. The Dow is dowing. It's not doing much. It's down a little bit today. Qs are up to new all-time highs, and SPY is just doing the same. So SPY and QQQ new all-time highs today. The 10 years at points is up 0.61. I have a feeling, you never know, because there's no guarantees, but the 10 years not going to do much the next 2 days until Thursday. Thursdays we got CPI, and then Friday is PPI. So I would give my guess is the 10 years probably not going to do much today and tomorrow. And then once we get to that, unless it tries to do like, kind of a pre-CPI move up or down, which may be a false move, who knows? And then whatever happens, CPI is the confirmation. But I wouldn't put too much weight behind the 10-year right now. I put more weight behind it on Thursday or Friday. So there's Apple we're looking at. Looks really strong. What else? Oh yeah, Bitcoin's up 0.5%. Nothing crazy. I would guesstimate that, well, for those of you who are like, yo, what do I, Bitcoin bull market, bear market. I mean, I'm in the same situation. Like, I don't know. I have no idea. But this is not that big of a, like, in the grand scheme, it's like down 25 to 30%. It's down not even that much from the all-time high that was set. And even from these relative highs, this double top high, it's not down that much off the highs, which, if you go back through past bull markets, you had some heavy corrections. I mean, you can look at this one right here, was kind of a hard one where if Bitcoin pushes up, kind of pushes higher, tries to go, and then just kind of really consolidating, not really making big moves from really July 2020 all the way through August, so like into September, so like 2-3 months almost, and then gets hammered, and then from there builds base and starts to push, into the fall. Maybe the same thing's going to happen here. I don't know, but you've had some pretty crazy moves on the back of that. And technically speaking, even in the last bull market, Bitcoin went from a high of 65K all the way down to like sub 30K, dropped over 50%, then went to a new all-time high at like 69. Not like it crushed all-time highs and went way, way higher, but it did end up going back to new all-time highs. So like, this is volatility, and people are like, oh my God, but like, in the grand scheme, this is not that big of a pullback in my view. Like, if Bitcoin goes under 50K, 45K, okay, now you're saying, no, it's like, okay, it's a bigger deal. But like, it's really not that much. It's just what Bitcoin does. 25% pullbacks are fairly common. But you get a 40% pullback, okay, now it's a different story. So I don't want to put too much weight behind, much there. Let it do its thing. Gold, silver, oil. Seemingly trying to roll over a little bit here. How much does it do so? We'll see, but trying to at least. Still kind of in the chop zone. Northern end of it, but really boring oil. Oil has not been very fun to follow or trade, to be honest, lately. Just been chopping. There's been some shorter term time frame trades. If you're a dip buyer or resistance seller, there's been good trades there. But for me, it's from a momentum perspective, has not been good. But that's also from my perspective, not from anyone else's. All right, here goes Nvidia. I would imagine you're going to get a new high of the day here soon. It looks very strong, and there it is, almost, maybe. Trying. Yeah, there's new high of the day. Not tradable for me, though. I mean, this is just not really it is like a level to watch. Like, you get 2 candles, but I want 3 really. Or I would want more of like a consolidation pullback and then a break of that, which we're not getting. We're just getting much more of a strong move up, which is fine. It's just how it goes sometimes. But if you look at the 1 hour time, you can go to different time frames. 1 hour time frame looks pretty impressive. 4 hour time frame, pretty impressive stuff. It looks good. It looks really good. So cool stuff there. Tesla, you can make the argument that this is a tradable play here as it's breaking new high of the day, but not a very clean consolidation. So I'm not going to trade that. Not something that I like to trade. I like much more of a tighter consolidation than that. And other than that, I don't think we have much else. Apple broke a new high of the day, new all-time high, but nothing crazy. I mean, that's not. You can make the argument. I could probably make an argument that I could trade Apple, but I'm not going to do it. It's not clean. It just looks a little choppy, not as clean as I would like to see it, and I'm not going to, there's no reason to force it. The other side of the argument is, oh, well, do you want to play an inverse, breakdown, which is like the inverse of my strategy. And Microsoft is a candidate for that. Like, this is a legitimate candidate for that. So what I would do is I would say, see how this candle closes on volume? Doesn't look great right now, but let's say you enter it somewhere here, stop loss goes low a day, and then you look for a 1.5 to 1 from there, which should be here, which is that's not that crazy. That could be very doable, I think, on Microsoft. So that would be the candidate. I would say there's a potential candidate for an inverse breakdown trade. Again, why would you do that? Well, you have essentially a breakdown setup inside of a much bigger uptrend the past week or two on the 5-minute chart, which gives me reason to believe that this could be a false breakdown. And I would not, like, if I was trying to short this, if I tried to short this, there's a reason why I don't just short this setup all the time, because it does not work as much in a stock that has been strong bigger picture. So that's the reason why I don't do that. But I would prefer to not do that. It could work, and I've had some data on it, but I don't have a ton. How do you get data? You got to try it, right? So yeah, I get it, but it's not really looking for that volume. I don't think we have the volume. Yeah. Yeah, this candle's volume is not that impressive to me. Like to fade the shorter term trend against the longer term. Yeah. Yeah, it's kind of like the idea, of the inverse, It's like the short term trend here would be down, long term trend. You zoom out a couple of days, couple of weeks on Microsoft has been up. So you take the opposite, or you do the opposite of what the short term trend is doing. So, short term trend is down. Okay, we'll buy. And then you anticipate the bigger picture trend to eventually pick it back up and for a bounce to come in. Now, I think you got to do that with some sort of criteria, not just randomly. You got to have a stop, a take profit, an idea. And so for me, that's the idea. That's kind of where the idea stemmed from. But I need a trigger, and so I'm looking for my breakout setup to trigger it. But I want my breakout setup to be, in this case, the breakdown setup, and then I want to see the volume close back above the breakdown level with high volume, which we didn't get. We got that close back above the breakdown level, but we just didn't get the high volume. So, not going to trade it. But that's what I would want to see to trade that with more confidence. NVIDIA keeps going up. Tesla pushing up too. Yeah, it looks like a good day there for a lot of, well, my two favorite stocks would have to be NVIDIA and Tesla. And then I would say Meta. You can throw Meta in there, and even AMD could be in there as well. It's like my top 4. I love those. I love trading those stocks. They've been my favorites. I would imagine they've been my best traders for the past year plus. But I'd have to go back and check the data specifically on that. Let's check out some dailies. Yeah, that's the Amazon daily that I'm looking at. I like that. But, Google broke out on Friday and just, holding up nice. Yeah, here's the mRNA. I mean, as much as I don't know. I think there's a really good potential trade there. Why? I think not only are you kind of unraveling this bird flu kind of rally that occurred, really this right here, but you are also in a mass, big picture. You're in a big picture downtrend, from COVID times. And on top of that, you have, I think, the potential for a very big breakdown occurring. Sorry, I need to draw this in. Try to draw this in. Yeah. I mean, if you draw the lines, however you want to draw the lines, but if you were to connect, I guess you'd have to kind of say fuck this candle, which some will say no or some will say yes. I don't know. But I'm connecting candles where I get more touches, so this is where the trend is to me. 2 touches, a third for multiple days. You can even say almost a fourth, a fifth. And then right here is wait a second. This long-standing trend line has now broken, technically speaking, and you've got a bear flag set up. I mean, that is a beautiful, in my opinion, a beautiful opportunity for a short if it breaks down. So I would not be against a swing trade there or a day trade there, depending upon, when and how. But that's what I see. I look at that mRNA and I'm like, oh man. And then I don't want to get, you don't want to get like, oh, I think it's going to go lower, because you can easily say that. Definitely would not be a company that I'd be looking to invest in personally, if I was an individual stock investor, but I am not. So yeah, how much, weight do you want to put there? But the idea here could be, I'm looking at this from a, let's go to like a 1 hour chart perspective. The idea here could be something along the lines of, if we break under 115, you enter, and then you stop out over the high of today, which was around 119. Okay, so you're risking about $4 of upside. And then your downside target, if we do the math here, would be, let's say, risk today's high, which is pretty much the top of the consolidation, 119 roughly. And then to get a 2-to-1, what do you need? You need a 2-to-1. For a 2-to-1, you need to move down towards about 106, 106.50. It's not that crazy. Zoom out. Is that a fair target to be had? I think so, because that is just north of this volume node. I would not want to target below $100. I think you could even get towards $100, but I think that 105 area is a decent spot. So 106.50 is a 2-to-1, just from a risk reward perspective. I like the look of that. I do. Second piece of that too is, I think you've got a decent idea behind that, because of this stock does whatever it wants. It's not necessarily as heavily correlated to what the overall markets are doing, as you've seen the past, month and a half, right? From the highs that we had back here at the end of May, what has it done? Nothing but go down pretty much, whereas the market's done nothing but go up pretty much. So it kind of does what it wants to do. And I like that from this trade idea perspective. Yeah, it has had some very big, and I've done well on it in the past. I traded it back here when it broke down under this spot around 97, and I caught a little bit of this move. That was what I believe started that was like one of my first trades on my first prop firm account back in October of last year. And I think it was my best month. October of last year was my best month, I think, in terms of like, I don't want to say not dollars, but in terms of like executions. I was dialed in. Like, that shit was working nice. So I'm not saying that that's the reason why I would trade this again, but if you've got a good sense for it and you've watched it for a while, that helps. Doesn't hurt, I don't think. So we'll be watching the 115 area. That's really the area I'm watching. I have an alert set, so there's no worry to miss it. If I want it, I'm sure, if it's there and I want it, I'm sure I'll have the opportunity to take it at some point. So we'll see. But back to our main movers today. Nvidia's looking strong. Tesla's up 2% now. Very nice move. Not up to yesterday's high just yet, but getting there. Here's Tesla's 1 hour chart. If Tesla provides an opportunity today, provides a setup for me, very likely I will take it, because simple fact that yes, yesterday you had this pop above that like consolidation high, but it didn't really go. It kind of came right back and fell into that consolidation. Now today is kind of your second attempt. If it can go, you may be looking at a bigger move up towards into the 260s, somewhere up in here in the next day or two. That's kind of my view. So I like it. I like it a lot. And now we just wait. Let's keep the 1 hours up for a second. Nvidia 1 hour, pretty strong, getting extended there. Tesla, I don't think is that extended on the 1 hour because of, it's up a lot, bigger picture, yeah, but compared to the past couple of days, it hasn't done a ton. So opportunity for more momentum there if it wants to go. Meta kind of wonky, big move on Friday, gave a lot of it back Monday, gave like half of it back Monday, and now it's just like, same kind. Well, Google's been strong, but I don't like this upper wick right here so far. Amazon 1 hour, definitely more room for a continuation breakout if it wants to go, but that's the big if. And then here goes Apple. I love the Apple lower wick there, and then the breakout. So Apple's a candidate for a trade today too, I think. I don't know if you're going to get a setup, and I haven't done very, very well on Apple. Just historically for me has not been the best for my strategy for whatever reason. So I would need to see a perfect setup playing out. But right now it's strong. So here's the Microsoft that we were looking at before too. The other piece with these inverse breakdown trades, I mean, when this occurs, what you can tend to find is a little bit of a retest. As long as that retest does not break a new low, you're good. And then, you know, it maybe finds a reversal and goes. The thing is, these tend to take a lot longer. These reversal trades take a lot longer than the breakout trades, which is also another reason why I don't like trading them. I would much rather trade something faster that moves more momentum, and that's it, versus these reversal trades, which can take forever. They really can. I'm gonna rip through the my main lists here. I'll go large caps, and then I'll go mid risk on. See what looks good, if anything looks enticing. Just to get a pulse. Like I said, the mRNA is where my eyes are at. That's probably where I think there's the biggest opportunity. I just saw something today for 2 seconds. Let me see if I can pull it up, because I thought it was interesting, and it was from Ryan Detrick on Twitter. Let's see if I can find it. Let's pull up his stuff. He's pretty good. He's got some good stuff. Yeah. Current 345-day streak without a 2% pullback on the S&P is impressive, but not unprecedented. Past market cycles have seen even longer periods. That's kind of cool. So yeah, people I've been hearing this too, that the S&P is on, you know, almost a 1-year streak without a 2% pullback day, which is kind of weird. It's like a lot. Getting close to the 2016 to 2018 period. But the thing is, this chart just shows you during other bull runs that I think you've had very, very strong, or you can go a lot more. You could go a lot more. Okay, here it is. These 3 months, June, July, August, going to be quite strong during an election year. Then you have the pre-election jitters, September, October pullbacks playing out so far. So I'm curious how this is going to pan out, because these are actually really impressive numbers. You know, June 1.3, July 0.7, and then August 1.3 as well, which would mean that maybe there's more room for bigger moves. First 2 weeks of July is historically very strong, which we're kind of in the middle of right now. I don't know, I just like looking at some of that data, some of the stats, because it's kind of cool. Taking out the big winners, this is still an average year. Interesting. Interesting. Largest drawdowns from all-time highs. 92 years ago, yesterday, was the low. Huh. That's what I was saying. Like, I think that we have to be kind of careful because I think at least because of the potential for, something like this to happen at some point. You know what I mean? Like we get a big correction, a big pullback, a bigger drop that does not rebound to new all-time highs for a long ass time. It's been a while since we've had one. So I would just say that be ready. Doesn't mean that you can trade that. There's no reason to do so. Just be prepared. Don't be dumb. But that's kind of interesting to see. 89% fucking pullback. Imagine we have an 89% pullback off the highs. Holy fuck. Oh, God. Yeah, those dip buys can take, and that's another piece to why I like the momentum strategy too, because you mean unless you're willing to just set it and forget it, But when you play the breakouts, my trades on average on the 5-minute time frame, 30 minutes. If they're going to work 30, 40 minutes, usually they're under an hour. So it's kind of nice not having to worry about like sitting there for, the whole day. I guess you don't have to, but. Yeah, I mean, the thing with that video too is like it's not like and that's the type of stuff that you see. I feel like the fear mongering and whatever content that gets people, holy shit, on YouTube and whatever. It's not like that. I'm not saying like, because who am I to say like that we're gonna have a massive correction? I don't know shit. All I'm just looking at, and I think anyone could do the simple math on it, and say, you go back in time on the S&P and say to yourself, let's go to the monthly chart and go back huge. Go look at the S&P. This is an amazing rally, realistically. Like this is a big one, really, from the 08 time frame. Massive. You go through very, very big rallies on the S&P for periods of time, and then you get bigger corrections at some point. And then there was a period here. This was pretty nasty for a while. It's all relative. It's not like, oh my God, like we are going to crash to oblivion, and maybe we do. I mean, who knows? And it would be crazy if we did. But just be ready for, at least I think in the near-ish future, something like this to occur again, or something like this to occur again, where we have a long period of time when the market is not just going to all-time highs every day, or every couple of months or every couple of weeks blasting new all-time highs. Been very spoiled, I think, but you need that, because if that doesn't happen, you don't allow for the massive crashes and corrections to occur, because you need to condition people in the market to expect it to be really good and easy and just go into new all-time highs, buy the dip and all that stuff, because then that sets the mindset to like, oh, we can just buy the dip and make money, and it's easy fucking money, let's go. Whereas maybe it's not that easy. Big picture. But again, if you are simply a dollar cost averager and you ride the waves, you don't care. All it really is for people who are, and no one's going to say this, I could do it behind your back and I wouldn't say. I could say, yeah, I could be saying, yeah, well, I wouldn't want to be buying here, or I want to have light exposure or whatever. Meanwhile, I could be all in on NVIDIA in a separate account that I'd never tell anyone about. I could. And be looking for NVIDIA to keep going higher and higher and higher and higher, play the gambling mindset. But it's more so for the people who potentially do things like that, where they might rationally think, oh, maybe it's a good idea to just trim up and get lighter in my portfolio. But then deep down, they're still doing things that are risky. And if you can think about that for yourself and make a decision to potentially minimize some of that risk, I think it will probably pay off. Again, it's all relative. It's the same thing that I deal with my dad and stuff, who is heavily invested right now, and I'm like, yo, it's probably, and he's like getting up there closer to retirement, so it's like, okay, probably not a bad idea to be just lowering your risk. And I'm not saying that means sell all your positions. It's not what I'm saying. Just lower your risk a little bit. Because if Nvidia and Apple were to fall 50% in the next 3 years, I'm just saying, I have no idea. If they did, they could. They could. If they did, your net worth gets cut in half. Or maybe not in half, but close to it, right? Because those are huge positions in your portfolio. It's like, well, is that the smart? Do you want to? It's everyone has their own risk tolerance. Is that something that you're okay sleeping with at night, or would you be okay with that potential? Because the same can be said for, well, what's the solution? Well, even if you go to the S&P and put your money in the S&P, well, the S&P could, like we just saw on that post, it could drop 89% in the next 3 years, as it did from 29 to 32. It could. It's not likely to happen, but hey, we're almost 100 years later. 100 years. Can't believe we're saying that. But we're almost 100. Like we're like 95 years later, something like that. 90 something years later. Why not? It could. You know, the more likely would be something in the 30s and 40s. I think from a bigger correction standpoint over the course of a year or 2 or 3, if we're gonna get one whenever it happens. But still. So you look at like, oh, well, the S&P would be down that much. I'd be getting fucked. Yeah, but inside the S&P, go back and look at some of those stocks that you're holding. I mean, let's go look at Apple. What happened to Apple from October of 07 to March of 09? Let's just check it out. I'm just curious. I'm really just curious because I've never actually done the math on this one. If I go to the weekly time frame, we zoom out bigger. I mean, that was the tech bubble. Yeah, here it is. So, I mean, the highs that were put in technically in the end of 07, so you can say all-time highs, but it did come back up. Okay, but high to low, yeah, it was down 60%. So, well, yeah, okay, the S&P dropped 54%. Apple dropped a bit more. Some stocks are going to go more. Some may go less. I mean, Nvidia, believe it or not, was still trading back then. Apple had more of a move in the tech bubble, though, that's for sure. I mean, Nvidia is probably even worse, so you don't really want to know this number, but we're going to pull it up anyway. 85%. It dropped. But, some will say, well, I don't care, because while, yes, that was 85%, look at the bigger picture. I agree. But if you're nearing retirement, for example, could you potentially deal with a 15-year span of time, 10-year span of time, of your money being stagnant or down? Or would you rather put it in the S&P and maybe sell some options on? You can sell options on the stock too, but that's more risky because the stock's more volatile, so it's easy to lose. Actually, a lot easier to lose. I think it's way, way easier to lose if you're playing the covered call game, which I recommend. I think that everyone who has any understanding of how the markets work and options work, I think they should be selling covered calls on their portfolio, but doing it in a very low risk way. Meaning, if I'm selling covered calls on Nvidia, I'm not going to try to make a killing on my covered call for next Friday. I'm going to maybe go out a month and I'm going to go fucking way out there and I'm going to make a few bucks. That's all I care to do. A little bit of money. It's not like it's supposed to make you a ton. It's just you have an asset that can pay you a little bit of money at a very, very low risk with plenty of runway. That's how you do it. The problem is people get addicted to, oh, well, I can, if I just sell covered calls a little bit closer to the money and we go through a stagnant period in the market, well, I can actually cash flow, a couple $1,000s a month off my stocks, and I only have $100,000 in these stocks. And you get all like excited about that. And I see the appeal, but the potential to get blown out is so huge. Huge. I mean, I see it. I've seen people do it, and it's like, it's not worth it. I've even done it myself. It's not worth it. I haven't done it that much myself. First of all, I haven't been doing it for that long, and I only was selling covered calls on individual stocks for maybe like a year or two span before I kind of like changed my approach to getting out of individual stocks. But I would sell them way out, and I wouldn't make a lot of money. I'd make, like, if you go back on some of the videos that are on the channel or whatever from a long time ago, I'd go and sell covered calls a week or two out and make $5, $10, $15, $30 on my different ETFs or stocks. It's not a lot of money on the portfolio size. My portfolio was pretty small. It's not a lot of money, but that's all I was trying to do. I was not trying to make a killing. I was selling these contracts for 10 cents, 20 cents, 5 cents even sometimes. Way out the money. Way out the money. You can sell them for more, sell contracts, sell options for 50 cents, $1, $2 on some of these crazier mover stocks, closer to the money. The problem is that you are going to deal with a very high chance of it blasting you out. And then are you going to buy the contracts back? Or are you going to let go of your shares? You got to make that call. Some people are not willing to let go of their shares. What's going on, Hudson? Yeah. No, I think that the whole doomsday, I mean, it's not. Yeah, exactly. Exactly. It's not meant to be, but it's just meant to maybe, hopefully, someone who is doing risky things to check themselves and to reconsider what they're doing. Oh, well, what goes Meta? I mean, Microsoft breaking down to new low. Trying to, at least. Yeah, so I think that my eyes want to be on mRNA. Came down to that same area again just recently, 115.40. And yeah, I like the look of it. I would like to see a breakdown under 115, and I would probably go short on that if we get it. I know I got a lot of lines here, but I'm looking for that breakdown. No, yeah, and that's one thing that on the covered calls too. That's one thing that I know for a fact. Someone like my dad who was doing that and was a good idea. He was doing it on an account that he was managing, and we were talking about that a while ago, and he's like, "Oh yeah, I'm gonna start doing it." So he started doing it, and he got addicted to the cash flow, which is great. Don't get me wrong, but what ended up happening was the tax time came for, I guess, last year when he was filing the taxes. And because he never sold the stock. So he had stocks in his portfolio, but he never sold the shares of the stocks. And he just sold covered calls. And so he never let the covered calls expire in the money and let them take the stock. He always bought the options back. If he was way in the money, he would always buy them back for more if he was wrong, essentially. And what ended up happening was he was on Nvidia, Netflix, and maybe something else. I think Nvidia and Netflix were the main players. Maybe Meta was in there as well. He bought in this account maybe 100 shares or 200 shares of each, something like that, back in 2022. It just so happened to be like end of 2022 when the market bottomed out. So it was an amazing timing. Was it kind of accidental, but it worked. The timing worked out. And he ended up having like really big gains on the portfolio over the past 2 years or whatever, unrealized. But realized gains, he was actually at a huge loss, like down like $35,000. And I was like, what the fuck? How you, 35,000? What did you do? Like the account's at all-time highs. But then I'm like, oh, it's because of the buying back of the covered calls that lost you 30,000. So technically speaking, had he bought those stocks in that portfolio and did nothing, he would have had $30,000 more dollars. He could have bought a new car, brand new off the lot, I guess a Camry or whatever, brand new off the lot, with the money that he wouldn't have lost by selling covered calls and having to buy them back. Because now that's because the market was up. If we were in a bear market, then there's a good chance that you would have realized gains, because most of the time, we're going lower, so most of your covered calls are expiring worthless. So you'd net a few dollars, or not a few dollars, you'd net likely gains on the covered calls, but that you'd realize, but then you would have unrealized losses on the stock. So it's a product of the market, but just goes to show you, how, you could lose or miss out. You can burn holes in your account for no reason, and it's easy to do, very easy to do. So I don't mean like it's not like a reason to not do it, but I tell him, I'm like, well, let's think about this. What if instead of covered calls in Nvidia, Netflix, and Meta, which are pretty volatile stocks, you did that on IWM, QQQ, SPY, DIA, those ETFs. What if you did it on those? And then I think to myself, you could sell, you're not going to make as much cash flow, but probably if you just have a basic understanding of how much the S&P moves, the Russell moves, and the NASDAQ moves in a given week or month, right? What their averages are, you can sell covered calls just north of the averages and more likely than not have them expire worthless a lot more. So that's kind of my argument, and I advocate for that approach much more than the individual stock approach. I just think you're setting yourself up for potential, not failure necessarily, but you're just going to potentially, you're going to minimize the gains. You're going to kind of cap yourself in a really strong bull market like we've seen the past 2 years. And that's what happened. I think it's good to not marry one, not marrying a stock. And that's why I like the ETF approach, because it's like even more so not marrying a stock. How's ExxonMobil doing today? Curious where that guy's at. It's up a little bit today. Oh, wow. Big move there. I wonder if oil bounce. Yeah, oil bounced a good bit off of where it was earlier. Yeah. Walmart. Oh, little Walmart action. There's a trade on Walmart. I have never really, I won't say never, but I haven't really day traded Walmart. But that would be the setup, technically speaking. But Walmart historically is not a very good momentum player. But at the same time, you say, well, you're breaking out, baby. You're breaking out. Breakout's a breakout. I see you. I do actually like the look of that. I do like the look of that. We'll monitor that one. Tesla new high of the day. I forgot to cover call sign. And that's kind of how I would personally want to do it. Like even on the ETFs, if it gets assigned, okay, shares are gone, because where I sell my covered call for the specified time frame, I am very happy with those gains. It's kind of my approach. I'll be very happy with those gains. For example, if I sold a covered call every month or so on SPY, and I know, okay, what's the average? Well, SPY on average would move up 0.6% per month. I'm just throwing a rough number, I don't know, something like that, to give you your average like 9% per year. And I know, well, it's context, right? It's not like, well, I'm going to sell a covered call 1% out of the money. No, because if we've been going down the past 3 months, then if we get a bounce back month, then you can get blown out. It's all context. But maybe I sell a covered call 5% out the money on SPY. We can look at that. I'm curious. I'll pull it up on Robinhood here. I'm just curious what you get paid for something like that. So if you went in SPY, it's been up a lot. So they're going to probably be nice and juicy. But if you went in on SPY and you said, okay, I'm going to go out to early August. Let's go like August 9th, about a month out, exactly. And I'm going to sell, well, let's do the math on where SPY is and what would be, like a 5% move. I don't know. I'm just giving a number. Let's see. So 5% from here on SPY would be, that's a big ass move. That's actually a lot. Sorry, maybe that's too much. That would be getting you up towards, what is that, like 585? I don't know. Let's just check what 585 would provide you, if you can even go that far. Yeah, you can. Yeah. So you can go out and sell a 585 call on SPY and get paid $33 right now on 100 shares. Is that a large percentage? No. Definitely not. But if I'm thinking to myself, yo, if SPY gets there, take me out. I'll lock my gains and then I'm going to look to sell puts for a pullback to get back in on SPY, and maybe those will never fill and I'll just cash flow a few bucks until they eventually do. I don't know. There's a million ways to do it, a million ways to skin the cat, but it's not, you have to have some sort of strategy behind it. And if you do, you're good. I wouldn't worry too much because it'll just average out over time. Now, percentage wise, it's not a lot. Small cash flow, but do that 12 times, add it up. It's cash flow that you wouldn't have had if you didn't do it. And if you sell far out the money covered calls like that, dude, the chance of you getting executed on that, very low. And maybe if you did, it's not a bad thing because you're happy with the gains. Think about how crazy that is, that we are a 5%, well, from 600 on SPY. Where's that? We are from SPY hitting 600. We're literally like an 8% move away from SPY up blasting through 600, which that's not that crazy because what has SPY done from the pullback? The pullback from April, SPY is up 13%. So like half of that move, if we get like half of the move that we just got from like mid-April to now, if we get that into the end of the year or into whenever, we're over 600 on SPY. Crazy. Shoot for 34%, including share appreciation. That's solid. But when you think about it too, like, I don't know, would you rather have a much more consistent, more stable cash flow and income? Or would you have the volatility of dealing with the individual stocks or the craziness or trying to predict where we're going to go, and I don't know. I personally wouldn't like that. I don't like these charts. Small gains over time. Dude, if you got, but the thing is, like, think about that too. With all that cash flow that you can be pulling in, which might not sound like a lot, but cash flow to buy more shares of the ETFs or whatever. And then you're also hopefully doing a recurring deposit as well every month or every week or every 2 weeks, whatever your time frame. It don't take too long. Like, it won't take that long for you to build up a really nice portfolio where a few percent cash flow is substantial money. Maybe you get a little lucky and you happen to have some cash in a really big bear market that comes up soon, and you happen to be a little more aggressive, or you have the ability to dollar cost average heavier in the next bear market. And then on the backside of that bear market, or not even that, like that bear market is when you're building the foundation and you're setting the stones and you're building up the position size and you're building up the cash flow potential. And then when you pull into the next bull, you're obviously appreciating on all your dip buys and all your dollar cost averages. And so the portfolio goes up and your cash flow continues to rip, which is what it's all about, I think. Yeah, I think that there's a trade there on mRNA. I think that there is a definite trade there on mRNA. I would consider that. Head to Texas on the hurricane. Oh, shit. High voltage alignment. Oh, wow. Damn. I know Houston got rocked. Houston got hit pretty hard. And from what I was seeing, because I see people who live there, I've seen some videos out of there and whatnot. I think it would have been a fun storm because I always want to chase one, like just chase a hurricane. That one would have been a fun one to chase, I think, because it wasn't too big. Like if you went to the Texas coast, kind of like, you would have got to experience a hurricane, but it wouldn't have been that dangerous. Like it's not like a Cat 5 blasting through in a highly populated area. You could have probably gone in on that coast and ridden it out, had fun, if you want to say that that's fun. For some people that's crazy, but for me it's kind of fun. But yeah, I know it was pretty nasty. I don't think it was. Hopefully we haven't had a ton of bad ones. Like I feel like, well, past couple years I feel like we always get one big one. Hopefully we don't get too many big ones this year. that hit the US. But I feel like we had a quiet season last year, even the year before that, like just in terms of number of storms. Hasn't been that crazy. So we'll look for that one whenever the time comes, and I have alerts set, so we'll get alerted on it. I guess I can put another alert there. Breaking low of the day. If it breaks low of day, I would also want to be alerted to take a peek at it. Ten-year is pushing up a little. Not crazy. But it's pushing up a little bit. Probably can get rid of these lines in AMD's chart. Not really relevant anymore, but it shows a good breakout. Netflix. Oh, by the way, I got a position on Netflix that I'm waiting to see it take profit. I moved my take profit to up north of 700. Is that a risk? Yeah, but I've also moved my stop loss to break even, so I can't lose on it. And I've been in this trade for a while. The reasoning is because if you look at the daily time frame, I don't usually do this, but I could sell half of it, I guess technically, I might take half of it off at like around 700 if it gets there today, or just shy of that. The reason why is because we had originally the breakout here, which I got in on this day, and then it ended up just kind of pushing a little bit higher and then just kind of pulling into a consolidation, and then it broke out again. It had a secondary setup and broke out again. This is actually I love when you get a consolidation like this right underneath all-time highs, which that's where that 700 blue line is, this one right here. That's the all-time high. A consolidation under, like, essentially getting my setup right underneath all-time highs is a really good setup and a really good look for a potential blast into all-time highs. The problem that I would then have to think about is this week you've got CPI on Thursday, PPI Friday, so the potential there that, you know, could halt you. And then after that, you've got earnings in about 2 weeks, a week and a half. Yeah, about a week and a half. So next Thursday. Yeah, so I got to get out by next Thursday for sure. Either we're going to blast off or it's going to sputter out and whatever, which is why I think the better idea would be to take half the position off at my original target and then leave the rest for a push up over 700, which is what I think could be a really good breakout trade, a high momentum trade. The only problem is that if you get a negative CPI and this week and stuff, we could, reverse hard. So you gotta be careful, and you're at a resistance point. So there's a lot of reasons to be taking profits there. So I get it. Now that I think about it, like if today or tomorrow we get up there, I might just get out of all of it. That's a smarter move. If we hit 700 today or tomorrow, we out. But chart looks good. Looks like a good setup. I like it. Took a while. Took about a month almost, but sometimes they do that. I'm fine with it. I'm okay waiting a month on a swing. I don't really care. I do and I don't. I don't right now because, well, I do, I guess. I do right now because I'm not playing. The sizing is not very big. I won't give a shit at all in a couple of months when the sizing is up substantially. So, because I passed phase 1 of this account. Now I'm on the funded phase officially. And I haven't traded it yet. So it's reset to a $10,000 balance. But I'm going to buy a $200,000 account with them shortly. Not sure when. If they have a good deal or whatever, I'll hit it, because the account's going to cost like over $1,000, which is kind of a lot, I feel like, for a prop firm account. But I mean, by far and away, the best one that I've used for stocks. Not even close. Like, no one comes close. The only thing that I would want to see, though, is an app. If they had an app for the platform that I use to trade all these stocks on, I would be all in. If I could bet on them and I'd be very bullish on them. They don't yet. Hopefully it's coming. That would be game changing. But yeah, like, I'd want to maybe get a payout or two, feel good about them, test that process. Once I feel good about the payout process, then go for it. So that's probably what I'm going to do. We'll see. Maybe if the rest of July, if I have a good rest of July, I don't know, because you're about to get into earnings season in the next like 2 weeks, so I'm going to be kind of skeptical of that. But I mean by, like, if you have a good July and I have, a couple $100 payout or a couple $100 in profit sitting there, I'll request a payout, see how long that takes, and if I get that pretty quickly, okay, now I'd be happy to I'd feel better about buying the bigger account, and then going through again, same thing. I'd have to go through the whole phase 1, phase 2, challenge, this, that, which will take time. But on that size of an account, once funded, I mean, you're talking about a swing trade on like a Netflix that, let's say on my current account, makes $170. You got to times that by 20, because I would just proportionally size it the same way. So it would be a 20x of my current sizing, which is a lot. But if you made $170 on a swing trade on Netflix that you held for a month, well, times that by 20, and you just made $3,400. And yeah, you held it for a month, but you had a trade that made you $3,400. That's, like 2 times what my rent in Austin was, so it's like, boom. Cool. Yeah, thanks. And also, yeah, I definitely need to get the first payout before I buy it, because I was like, oh, should I just buy it now? I'm like, let's be smart here. Let's make sure that the payout process works good and everything before you do that, because that's a bigger one. And let's say that they went under. They're a new prop firm. They went down, and I happen to pay $1,000 or $1,200 for the account, and then I never get my money back. That would kind of suck. Got a couple $100 payout, but then I end up paying them. I end up paying them more money than I ever pulled out, which is kind of like not ideal. But on that same math, that's where I feel like I'd get a lot more laid back with the trades. When I say laid back, I mean looking for bigger pictures and not maybe day trading as much, because I just don't, you don't need to. Like, why? It doesn't matter. If you hit 3 or 4, let's say you hit 5, you have 5 swing trades in a month. In a perfect world, I would love to win on 3 of those 5, but that's not realistic. Let's say you took 6, I'll say 6 swing trades in a month. I'd win on 3 of those in a perfect world, on average. And, do the math. I don't know. Let's just say that you're, based off that same math I was just going off of, the $3,400. Let's make it 35 to make it easier, just to make it easier. $3,500 times that by 3. So you'd make about 10,500 on winners. Let's just say 10. Let's just round it to 10,000. Make 10,000 on winners, and then if on average I lose 2,500 on losers, times that by 3. So you end up netting $2,500 a month at on average, let's just say, on that account size, which is really not that amazing, but that's like what real trading is like. Currently, right now, you're looking at months where I'll make 1,600, months where I'll lose 1,000, months where I'll lose 100, 200, months where I'll make 600 on the current sizing. But that's the reality. That's what real trading is like, and the numbers might not be as cool and flashy as maybe you hoped or thought, but it is what it is. That's why I think that the $200,000 is not necessary, but I think it's a really good idea, just because, again, the way I've been trading, it's like you get to a point where okay, if you want this to make actual money, you got to be playing with with a lot more money. And if you can get access to $200,000 of funding, that's pretty cool because now you can make, with your sizing, you can make, a couple $1,000s a month on average if you're profitable and you're playing the same probabilities and stuff. On average, some months you might make 10K, some months you might lose 6K, but on average, you're looking for the average. Hope that wasn't too loud. My bad. So yeah, Netflix looks really good. Pushing up. Other than that, don't really. Tesla's very strong, but that's not a very. I would not like to long this environment, specifically on Tesla. I would say I wouldn't want to short it, but part of me says if I was my old self, I would be like, yeah, let's short Tesla here, and then look for a take profit down here, But I'm not doing that. I don't trade that way. But that's kind of what my old self is signaling. Like that's what my gut is saying. Do that, or that has a better chance of happening. Based on the way it's been choppy. A choppy uptrend tends to not provide you a really crazy momentum move. So you're better off shorting the pop and then longing the dip. And right now you got a pop. Probably want to be longing the dip. You want to go long the dip whenever the dip comes, but right now we're in the extension phase. Oh, that trade on Adobe setting up. That's actually, that's not, like, this is one of those where the 5-minute chart looks beautiful for a short, like really good. I'm going to mark it up. I'm not going to trade this right now, but I would say I'd go for it 1.5 to 1. Beautiful setup for a short, in my opinion, right there on Adobe. But when you zoom out bigger picture to the daily chart, what does it look like? It's been strong. So I see the potential for the pullback, but it's been strong. Down towards 560. Yeah, targeting 561 or 560. Yeah, that would actually this could be a good trade. It's a small window. If you're gonna play that, if I was gonna play that, you don't small window, look for a small gain and get out of there if you're playing that. But it looks good. I mean, the reason why I like it too is because you're also breaking under, or you're very close to yesterday's low. So if you do break down here, good chance that you get a little bit of momentum going through the lows of yesterday, and that's all you'd be looking for would be like that little momentum push. So, well, we'll see. We'll check back on it, but again, tough to short in a strong market. Not easy to. It's just it's easy to do. You could do whatever you want, but I'm not a fan. I'm not a big fan based off my data, especially a stock that's been strong in the tech space. mRNA, different story a little bit because it has been very, very weak as of late. So I will be patiently waiting on that one. How's that Walmart looking? Ha! False little break. But I'm planning to do a full ass review Of these guys and my experience so far with them that I'll post soon, because I think it will be good to do for people who are, you know, getting into the prop from space and looking for stocks and stuff. And I think it's worth, but I'll be honest, it'll be a really honest one, which is my plan. We go for an hour already? Holy shit. All right, well, that means I should sign off, but there ain't much. SoFi, I think I should pull it up. SoFi didn't look great early on, but it's bouncing back. Yeah. There's not much here, man, that I'm like, oh, that looks really good, or that looks, you know, I just don't, not seeing it, not feeling it. We'll have nothing on the day trade side. Looks good to me. Let's check out the 5-minute charts again. Nope. Tesla, no. Meta, no. Google, no. Amazon, nope. Maybe, not really, no. Apple, no. Nothing looks good. Microsoft is like trying to freaking die. It keeps trying to die. But then it's like every time it gets there, it's like, I don't know. Are you sure? Are you sure? This could be a candidate for an inverse. If we get a breakdown and then the next candle or the same candle comes back on high volume and closes back above the level which you haven't had. You've got the breakdown, but you don't have the high volume reversal back up. Choppy breakdown. Would you want to trade this to the downside? I would not, because of the strength that it's seen in the big picture. So just leave it alone. Just leave it alone. I think that's where my eyes will be today. If anything, if. But I would need it to come back like as of, and this could just drain out. And if it does that, then no. But I would need to see it give me a setup like it did. I'm not shorting it because it's been strong. I'm not going to short it. But then I would want to see it to snap back on high volume, close back above the breakdown point on high volume. Entry, stop at low a day, look for a 1.5 to 1. Simple. That's it. That's all I would do. If it happens. It has to happen. The trigger has to be there. Which they tend to be not pretty rare, but more rare than breakout trades. So I'm going to wrap things up, though. Hope you guys have a great rest of your Tuesday. I'll be back tomorrow in the afternoon for a usual Power Hour stream. And I'll see you then. Peace.